Don't fall for the tricky no tax on overtime rule. Have you heard the buzz? Millions of workers are celebrating what sounds like a massive tax cut on their overtime pay. You've probably seen the headlines about the new no tax on overtime rule, thanks to a law called the One Big Beautiful Bill Act, or OBBBA, getting to keep all that extra cash from your hard work completely tax-free. It sounds almost too good to be true. Well, for most people it is. The reality is, a huge misunderstanding about this law is leading hardworking folks straight into a tax trap that could cost them big time. The widespread confusion is setting people up for a really nasty surprise from the IRS. But here's the good news. You don't have to be one of them. The law is real and the savings are real, but the details are incredibly tricky. In this video, I'm going to pull back the curtain on the OBBBA law and show you what nobody else is talking about. We'll break down exactly what it does, who it's really for, and the dangerous mistakes people are making. Most importantly, I'm going to give you a clear step-by-step guide to actually claim this benefit correctly on your 2025 tax return and keep more of your hard-earned money. Section 1, the simple promise everyone is talking about. So let's start with what is everyone so excited? The One Big Beautiful Bill Act, signed into law in early July 2025, created a brand new and very temporary tax break for workers that runs from 2025 through 2028. On the surface, the promise is simple. A chunk of your overtime pay is now exempt from federal income tax. For single people, you can get a break on up to $12,500 of this pay. And for married couples filing together, that number doubles to $25,000. This sounds like a dream come true, right? Think about all the nurses, construction workers, first responders, and manufacturing crews who rely on overtime to get ahead. The idea that those extra hours won't be eaten away by federal taxes is huge. It's easy to see why people are celebrating. You work more, you earn more, and now you keep more. It feels like the government is finally rewarding the hardest working Americans. It's the story you're hearing, and it's a great one, but it's only half the story, and the other half is where the danger lies. That name, no tax on overtime, is the first and biggest piece of misinformation out there. Section 2, the agitation for hidden traps you must avoid. This is where we cut through the noise. The no tax on overtime rule is not what you think, and if you get this wrong, you could be looking at a smaller refund or even a surprise tax bill. Let's break down the 4 traps you need to sidestep. Trap number 1, it's a deduction, not tax-free income. Let's get this straight because it's the most important detail. Your overtime pay is not magically tax-free. Every single dollar of overtime you earn is still fully taxable income, and you will see federal income tax, Social Security, and Medicare all withheld from your paycheck, just like always. The OBBBA law didn't change a thing about withholding, so what does it actually do? It creates a special above-the-line deduction. Picture all your income for the year, your regular pay, overtime, everything, going into one big bucket. The government taxes what's in that bucket. This new deduction simply lets you pull a little bit of that income back out of the bucket before they figure out the tax you owe. People are looking at their pay stubs right now, seeing taxes coming out of their overtime and thinking their boss is messing up. They're not. This is a benefit you claim at the end of the year on your Form 1040 tax return. It is not an immediate boost in your take-home pay. Trap number 2, not all your overtime pay qualifies. This is where the math gets messy. The law is very picky. The deduction only applies to qualified overtime compensation. This is defined as the premium portion of your pay required by the Federal Fair Labor Standards Act, or FLSA. For most workers, the FLSA says overtime is time and a half. Let's make that real. Say your regular pay is $30 an hour. Your time and a half rate is $45 an hour. Most people think that whole $45 is what the new rule applies to. Nope. The qualified part is only the half, the extra premium you get for working late. In this case, your premium is the extra $15. That $15 per hour is the only part you can use for the deduction. The base $30 you earned is just regular income. This gives us a simple but crucial formula. For standard time and a half, only 1/3 of your total overtime pay is eligible for this deduction. If your pay stub says you earned $15,000 in time and a half overtime for the year, you can't deduct $12,500. The most you could possibly claim is 1/3 of that $15,000, which is $5,000. That's your number. Any extra pay from a union contract or state law that isn't part of the federal FLSA premium doesn't count. Trap number 3, there are strict income limits and deduction caps. And just when you think you've got the math down, there are more hurdles. Even if you calculate your qualified overtime perfectly, you might not get to deduct all of it. First, the deduction itself is capped. $12,500 for single filers and $25,000 for married couples filing a joint return. And by the way, if you're married but file separately, you can't claim this at all. Second, and this is a big one, the deduction gets phased out for higher earners. The phase out starts when your modified adjusted gross income, MAGI, hits $150,000 for single filers or $300,000 for joint filers. For every $1,000 your income is over that line, your potential deduction gets cut by $100. The benefit shrinks pretty fast and disappears completely if your MAGI hits $275,000 as a single filer or $550,000 for a joint filing couple. So, if you had a great year or your spouse is a high earner, you could see this benefit shrink to nothing. Trap number 4, your employer isn't required to do the work for you in 2025. Here's the final logistical headache for this first year. For tax year 2025, the IRS gave employers transitional penalty relief. This means your employer does not have to separately list your qualified overtime compensation on the W-2 form you get in January 2026. Some might do it voluntarily in box 14, but you can't count on it. What does that mean for you? The ball is in your court. The burden of proof is entirely on you to calculate the correct amount. If you just guess and claim too much, you're practically inviting an IRS audit and penalties. This isn't a guesstimate situation. You need proof, which brings us to the solution. Section 3, the solution, your 4-step plan to claim this deduction correctly. Okay, enough with the traps. Let's talk about how to get this right. Here's your game plan to get every dollar you're owed without getting into trouble. Step 1, become a record-keeping expert starting now. Since you can't rely on your employer to hand you the magic number, you have to create it yourself. The single best thing you can do is save every single one of your 2025 pay stubs. Get a folder, create a file on your computer, whatever it takes. At the end of the year, you'll need to go through them to find your year-to-date overtime earnings. If your stubs don't have a YTD total, you'll have to add them up one by one. This is non-negotiable. Your pay stubs are your proof if the IRS comes knocking. Step 2, calculate your qualified overtime. Once you have your total overtime pay for the year, it's time for some simple math. For most people on time and a half, the formula is easy. Total overtime earnings, Tachi, say 3. So, if your stubs show you earned $9,000 in total overtime, you divide that by 3. Your qualified overtime compensation is $3,000. That's your deduction number. If you work double time, the premium is smaller. For that pay, you divide the total earnings by 4. Write this final number down and keep it with your tax docs. Step 3, file correctly on your tax return. When you file your 2025 taxes in early 2026, you'll claim this as an above-the-line deduction on your Form 1040. And here's some great news. You do not need to itemize to claim it. Whether you take the standard deduction or itemize, you're eligible. Good tax software will have a spot for the OBBBA deduction, but it will be up to you to plug in the correct number from step 2. Just remember to double check those income phase outs we talked about. Step 4, consider adjusting your W-4 for future years. Remember how we said this benefit doesn't show up in your paycheck right away? Well, once you know roughly how big your deduction will be, you can make it happen. You can submit a new Form W-4 to your employer and adjust your tax withholding for the next year. By accounting for the deduction on your W-4, you can have less tax taken out of each check, giving you more money now. But be careful. If you withhold too little and end up not qualifying for the deduction you expected, you could owe a big tax bill. It's always smart to be conservative, or even better, talk to a tax pro before you do this. Look, the no tax on overtime rule is a classic case of a government program that sounds simple but is a mess in reality. It offers a real tax saving for millions of workers, but it is absolutely littered with traps for anyone who isn't paying attention. So let's recap the big 3. First, it's a deduction you claim on your tax return, not tax-free money in your pocket. Second, you can only deduct the premium part of your overtime. For most, that's 1/3 of your total overtime pay. And third, you have to be your own bookkeeper this year and save those pay stubs to prove your numbers. Don't let a catchy headline dictate your finances. By understanding these rules, you go from being a potential victim of this law to an informed taxpayer who can confidently claim the benefits you earned. If this breakdown helped you make sense of this new law, do me a favor and subscribe. We put out videos just like this to give you clear, actionable advice. And most importantly, with something this new and tricky, the smartest move you can make is to talk to a qualified tax professional. They can help you get it right for your specific situation. Thanks for watching.